Then we welcome Paul Fox onto the big screen. Thank you, Paul. Thank you also for being patient and waiting for us here in the room. I thought I'd introduce you, and then I'll also ask you guys to do a kind of introduction. We'll see how that works. It's a standing up or sitting down activity, so probably not so challenging. But thank you, Paul, for being here. I talk into the room, so because otherwise I have my back to someone. So I'll turn my back on your screen for a second. Paul Fox works in Brussels and has done so for 12 years now. The first 6.5 of those he spent as a public affairs advisor. That is basically as a lobbyist for the European insurance industry. Then he changed. And for the last 5.5 years, he's been working as a senior research and advocacy officer at Finance Watch. Finance Watch is a European NGO founded in reaction to the financial crisis, when policymakers realized that there was no real counterpower to the powerful finance lobby. Insurance is, however, still one of Paul's areas of expertise, as are pensions. Now, to me, it sounds a little complicated to understand how insurances and pensions, what they have to do with solving the climate crisis. But Paul assured me in a nice pre-talk that it's not going to be more complicated to explain that to me or to anybody here in this room than it is to explain it to the European members of parliament. So he's very experienced, and we trust we are in good hands. Yeah, but we'll start with giving Paul a tiny chance to see also who is in this room. So, Paul, we just did an energy check before you came online, and the energy in the room was really good, so I'll skip that question. But I think it would be interesting maybe to know who has traveled to this 4-day event from outside Europe. Stand up, please, so we really, because it's hard otherwise to see the hands. Please stand up. Who has traveled from outside Europe to be here the day before yesterday and today and tomorrow? So, thank you. Okay. Who in this, you can please sit down again. Who in this room still goes to school? Okay, quite a lot of people. Okay, thank you. You can sit down again. Who in this room is active either for Plant for the Planet or for a different civil society organization working against climate change? Wow, we have a lot of active people in this room. Thank you very much. Okay, now I have a little bit of a difficult question. Yesterday we had a lot of talk about this issue of raising the trillions. So I would want to ask you, who feels hopeful that that will work in the next 30 years? Please stand up. Okay. So, who also, thank you very much, who also feels very, sure that they know how will that happen, how will that work to raise the trillions? Please stand up. Okay, okay, so we see we need help understanding how this is going to work. There's lots of trust, but we need help understanding how this is going to work. And Paul, that's where you come in. We are very excited to have you here. Last question. Has anybody already heard of Finance Watch? Yeah, 2 people. That's 3 even. That's great. Okay, but Paul, I think we'll need a little bit of help here. And we're going to be very excited. You'll tell us a little bit what you think is the main problem here in the field of climate finance, what Finance Watch does, why it needs a finance watch, and also what is at stake at the moment. And Paul has been very clear that if we don't understand him, if there's too difficult words or concepts that we have never heard of, he's just happy if we interrupt and ask him to clarify that. Yeah. So I'll sit here in the front with a microphone, and I'll try to look a little bit at you guys. And if someone looks like, no, not understanding that, or even waving, then we can interrupt and we can ask questions. Okay? And yeah, with those words, I would like to hand over to you, Paul. Thank you for being with us.
Thank you very much, and morning, everyone. Good to see the backs of your heads watching me on the screen. A slightly interesting way to give a presentation, but I hope you're all feeling that good energy this morning, and hopefully I can give a couple of answers of how Finance Watch, what we are, what we do in Brussels, and how we try and bring a civil society, a citizens' public interest perspective to this very big, complex, probably crucial topic of climate finance. I've got some slides, so I'm going to share my screen as well for you, but I'll probably jump in and out of the slides. And I just thought I would mention up front, the slides are kind of more of a tool for anyone who wants to get into the topic a little bit more after the presentation, because we've got a lot of detail and content in the slides, which might be interesting, but it's also, it's not sort of the intro to the topic, it's sort of the second module in a way. So. But let me start with Finance Watch and who we are, what we are. As was mentioned, we were set up after the financial crisis, and we were set up by a group of MEPs, by the commissioner at the time, so really by the policymakers who had to deal with financial lobbyists every day coming to their offices to try and find an organization that had technical expertise and could go toe to toe with these bankers, lobbyists who were telling them what they needed to change, what wasn't going well with the financial regulation that was coming in after the crisis. Huge amounts of regulation, a lot at stake, a lot of public pressure to do something. And what they realized is that there wasn't people in the room who could challenge what the financial industry was saying. And so a lot of the team that works at Finance Watch has worked in the financial industry, has been an expert in a bank, a risk manager, a derivatives trader, whatever it might be, worked in the jobs right at the heart of the financial industry in different parts of it. So when we come to a meeting with a policymaker, or we sit in a room with the financial industry, we can say, we know how it works, and we can challenge them on that basis. We try to gather together different members from all across Europe, and all kinds of members from academia, people who used to work in banks and are retired, experts, huge amounts of other civil society organizations with expertise as well, to give ourselves as much reach as possible and as much credibility as possible, because each of these organizations represents citizens and different parts of our interests as taxpayers, citizens, consumers. And so we think that's an important part of being a public interest organization, of having a voice and trying to give a voice to the concerns of people in the topic of financial regulation. So what do we do? And I don't know how we'll make this work, but I had a couple of questions that I would like to ask the room as well, maybe just to see or get an impression if anyone has an idea of some of the terms that we use here in Brussels and what your thoughts of them are, because we call ourselves lobbyists, even though we work for an NGO. And I wondered how people feel about the term lobbyists and lobbying, if you feel it's something that's positive, negative, or what your reaction to that term is, because it's a word that we use very commonly in Brussels, but we do know that people probably don't see it very well. Okay. I don't know if anyone has a thought.
Shall we do the standing up thing? Everybody who thinks that lobbyists is something very positive, make yourself very tall. Whoever has a bit of a more neutral position, make yourself half high. And whoever is not so comfortable with the term lobbyist, please stay in your seats. Okay, there is some movement.
There's some movement, and it's interesting to see. And I think it's a tricky term, lobbying, because we hear a lot of NGOs, a lot of organizations like Finance Watch saying financial lobbyists are the problem. You know, they're here, they're stopping us from regulating how we need to, they're part of the problem. But lobbying itself, or another word that we use in Brussels, advocacy, is really the job of trying to influence legislation, of speaking to policymakers, to politicians, trying to understand the legislative process, the opportunities to be involved in that process, to share expertise on topics. And so at Finance Watch, we don't mind the term lobbyist. We aim to be lobbying policymakers because we know the industry is doing it. So we think it's important that there's also people lobbying on behalf of citizens with a public interest voice, doing the same thing, using those same opportunities and balancing out those interests. We have another role, and that's part of what I'm doing today, but it's also something that we try to do through different materials we produce, which is to debunk something in the financial regulation debate, to try and sort of pull the curtain away and see what's really there. What are we really talking about when we talk about financial regulation? What does it mean for us? What does it mean for me as a citizen who uses a bank card or who invests some money in a pension for my future? What does it really mean, and why do I need to care about it? And that, I think, climate finance topic comes very, very close to one of the key parts of why we do that. You know, it's something that we start to see really matters to a lot of people because we're worried about our future, because we see that this huge financial system, these industries or different industries within the financial system have a very key role to play in our future. And climate finance, sustainable finance, as we often call it in Brussels, has a huge part in that. And we'll come to that, but it's not one of the first things we'll hear from the financial industry in Brussels is, should we be the one? And I'll maybe come to that later with you as well, ask you that question. Should the financial industry be the ones to do all the work? Should it be the financial industry financing the transition, raising the trillions? Is it up to them? But let's come back to that question afterwards. I'll just go through a little bit more of what Finance Watch does, and then we can start to talk about climate finance. There's a slide here. It's quite a clear slide. We analyze legislation, so we really look at proposals, sometimes non-public proposals. We consult MEPs, members of the European Parliament, the Commission, the representatives of the member states. We share our expertise, our analysis of that regulation with our members, with our partners. We try to communicate, to explain our positions to the media in particular, so that they can be spread as far as possible to citizens, policymakers, and others. And then we really do the lobbying. So the engaging legislators, people who are writing the laws, we speak to them and we try to put our positions, the public interest position, forward and say, this is what we think we need to achieve a positive outcome on this law for society. I can't see your faces, so I'm not sure if we're going in a very clear and sort of positive presentation for the minute, but I'm just going to assume we are, unless people start asking questions. But please do ask questions, as mentioned, if you have them. So as you can see here on the presentation, part number 2, the way that Finance Watch approaches this topic of climate finance is very much focused on regulation in Brussels. Because we think that that's our role, that's how we can, and along with a lot of other NGOs, how we can contribute to this big topic, this huge topic of climate change, and how it influences and how it impacts the financial industry and what they can do. But maybe before I jump into this topic and this part of the presentation, I just wanted to, again, have a little poll of the room if I could. Keep you on your toes. Probably sorry for getting you out of your chairs or not again, if that's what we're doing. But just to check, if people think that financing the transition is mainly the responsibility of financial institutions or not, is it the responsibility of financial institutions, or is there someone else who should be doing something about this?
So maybe you guys stand up if you say, yeah, mainly. Maybe you stay crouched if you say partly. And maybe you stay sitting down if you say, no, some completely other actor should finance this transition. The transition to a low carbon future.
Yeah, I'm pulling you back to what you were talking about yesterday, if I understood it well. So, raising the trillions, as it were.
So
okay.
where do the trillions come from? That's the question. Is it a...
Okay, thanks. So I think I think we have a lot of people, a lot of clever people, a lot of work which agrees with a lot of you in the room there. That yes, the financial industry is what we would call private finance. So the financial industry, money coming from the industry, is going to have to make a huge contribution to financing the transition to a more sustainable economy, to tackling climate change, eliminating those parts of our economy that just simply aren't compatible with the world that we live in, and having a future, very simply. So this is very much the transition that we talk about. It's about parts of our economy which are, activities, particularly fossil fuels would be the most key example, but many, many other industries which are polluting or unsustainable for different reasons, and just simply not compatible with the goals that we've set ourselves, and the goals that we've set ourselves because we know that we need to change our economy in order to survive, basically, as a society, as a planet. There is an element to this, though, where I think a lot of the financial industry, when we talk to them, and maybe with an element of truth as well, would say, well, why us? We're a private company. We're a private company operating in a regulated world. We're doing our job. We're a profitable company. We're employing hundreds of people. We're able to pay our shareholders dividends. So we're doing exactly what we're supposed to do. Society said this is how a good company works. We're a good company. We're doing our job. Perhaps they are. Perhaps they are doing their job. And I think that's an important point to recognize. But that brings in another role, another key actor here: governments, policymakers, and how they use the law to set the rules of the game. Because the financial industry, the financial system, is a regulated industry, and it sets the rules of the game in which these companies can operate, and says, this is where your responsibilities to society lie, and this is where society says you need to do more or less, or change your way of doing business. And so, yes, the financial industry does have a key role here, but it's really, to a large extent, the role of governments and of us to call for those changes to the rules, to say they need to change because we see a problem, and we need to tell the financial industry, we need to tell them what society wants and where we set the rules of the game. So I think it's a really important point to bear in mind, and to kind of, push and encourage the financial industry to do what it can. And they can choose, they can choose to make different business models, different choices within how they invest. And a lot of companies do that to some extent. But ultimately, their main goal in the society we live in at the moment is to be a profitable company, create jobs, and offer dividends to shareholders, for example. That's success. So if we want that to change, and if we want them to prioritize sustainability, we also have to change the rules that apply to them. And here there's in the topic of climate finance, and please just interrupt, because I'm going to start getting into topic and content now, so just interrupt if it's not clear. Here within sustainable finance, as we call it in Brussels very often when it's about regulation, we have two big topics. So within the climate finance area, everything called sustainable finance is really about directing money into more sustainable activity or stopping it from financing activity that is particularly harmful to the climate or to the environment, or perhaps also increasingly we also look at whether or not it has a social impact as well. So those three things are kind of put together. And that can look like regulation to have more transparency, to get more data on what companies' impact is. Where are they having an impact on the climate? What are they investing in? Are they investing in fossil fuels? Are they insuring fossil fuels? And is that an activity that we consider unsustainable? So that's one key part, transparency, creating data. Linked to that is giving that information to people, to the person who might be buying a financial service, a product. Does my bank, does my insurer, are they sustainable? Do they invest in these activities or not? So trying to have that information available to people using these products, to financial services users, to see, so they can choose, right? So they can there's an element of consumer choice, of us being able to direct that financing ourselves, because we can go to the companies that are more sustainable or choose a product that's more sustainable and help to move that money and move that investment towards these activities. And then there's an element of integrating sustainability and sustainable finance into the business model of a company, of these financial companies. So making sure that they have to look at their own impact, not just where their money goes, but also how they run the company. Do we take sustainability and do we consider the climate in every part of our business activity? When we have our business model discussions in our board, when we discuss how we want to run our business, and when we look at our impact, financial impact, and everything else, do we only prioritize profit and turning the biggest profit that we can, or do we have to think that we need to make some sort of provision as well for the climate, and that needs to be as important or on a parallel with the other aims and goals that our company has? And do we need to have expertise? So this is another key element as well, ensuring that there's expertise in the management of the companies, that they have a responsibility if their sustainability goals that they should set are not met. So lots of different elements and ways to integrate this idea of sustainability of climate into the very core of how a business runs, how these financial services companies work. So already a lot of legislation, huge amount of legislation coming through in Brussels. And some of the key things you'll hear about in this big package of legislation will be things like transition plans. So transition plans, a very interesting topic, and it links the two words which I've got up on the screen there for you for this segment: sustainable finance and climate risk. And I'll come to climate risk in a minute, but transition plans are a way of gathering all of those elements I've just talked about and having a kind of a plan for the company written out. What's our role in this move to a more sustainable economy going to be? How am I going to assess what my role as a company will be, and what's my plan? What am I going to tell my investors, tell my supervisor, tell citizens, consumers, what my role is in this transition? And that's a transition plan, from how we see it, is very much looking at what your impact is, understanding how your company impacts the economy and the climate, so understanding what activities are sustainable or not, and then making a plan of how you'll reduce that impact. Will you accompany the companies? So will you help them? Will you still provide them money so that they can change their activity, so they can transform their business, or so they can perhaps completely swap the company's role and take on a completely different business? Because they'll need money to do that, right? I mean, if we just kill the company and the activity, there'll just be people without jobs. The company won't have any money to change. Maybe that's what it should be. Maybe we should cut the financing straight away, but it's not. There's an element there, as you can see, where it's not so simple. At least in Brussels, that's not the discussion, that we should just cut all financing tomorrow. It's rather, how do we make sure that these people still have jobs? How do we make sure that this company has an opportunity to change? Difficult conversation, because fossil fuel companies in particular have made huge amounts of money, and the financial industry has made a huge amounts of money investing in them for many, many years. And so a lot of people rightly ask the question, well, with all that money made, should we really, should we give them more time? Do they deserve more time? Do they deserve more money? But difficult questions, and just to give you an idea of what the discussion, what the flavor of this topic is in Brussels. And what we see at the moment is a big dividing line on this topic between civil society, NGOs, activists, campaigners, and the financial industry. And the financial industry that doesn't want to take responsibility for leading change here. They're saying, something along the lines of climate change, maybe, it's happening, we recognize it, we're doing what we can, but we don't need regulation. Which to us, if we think back to what I just mentioned at the very start, seems like a strange thing to say, because we know they're having an impact on the climate through financing certain activities. And we know that their main goal is to continue to be profitable. It's not to address climate change. That's not their way to be competitive yet. So it's difficult when we hear that in Brussels to understand why are they saying that? What's the interest there? And the interest is just simply that this change, this investment that they would have to make in collecting data, disclosing it, making transition plans costs money. So they will be less profitable, perhaps for a short period of time. But this is, I think, one of the key perspectives here, and it links to the second part of this part of the talk that I wanted to give you on climate risk, is this short-term versus the long-term perspective. And with climate change, we don't know how long-term we're talking. Are we talking extremely long-term? Are we talking 100 years? Are we talking 50 years? Every year, things seem to be getting much, much worse. We see unexpected changes, multiplying climate events in how severe they are, in how their impact on financial industry might be, things that need to be insured, but where the losses are starting to rise. Floods in Germany, wildfires across Europe, extreme weather events all over the globe. So very difficult to say how long-term we're talking. But then for a financial company, they look very, very short-term in a way. They look at, an oil company is very, very profitable. It's very, very profitable today, and it's probably going to be quite profitable tomorrow, maybe even in a year. And I'll wait. I could wait. I could wait until they're less profitable, and then I could stop investing in them. And then at least my shareholders might get some good dividends. The people who are investing in my company will be happy because I'll be a profitable company. And I can still stop the activity when I need to, because there's still a few more years where we'll need that oil company and that investment in it. So there's a very short-term perspective in the financial industry compared to where this change is and what we need, and looking at where we can drive competition, really, because in the end, at the moment, we're competing on a very, very short-term perspective to be as profitable as we can today, but not looking so much to how can we have a profitable company in the future, which ultimately, if it wants to survive, and some companies now are starting to recognize that, will probably have to be sustainable. Otherwise, they too will be lost in the transition. That's quite a lot of talking. Quite a lot of talking about a very detailed bit of regulation in Brussels. I hope everyone is following okay and sort of feels like they've understood most of what I've said, but also, a question I would have is, would anyone challenge that? Does anyone have a different view on it? Does anyone think something else? Or if you don't, it's fine. It's not a problem. But just curious to know if anyone has a thought on any of that, a thought on a different perspective on the sort of the role of finance in the transition, as we would say. So in helping to finance sustainable activities and help to get out of activity that is causing and accelerating climate change.
Hi. So my question is, we know that some companies and corporations adopt the methodology of red list to treat indifferently traders, actionists, and even workers within their operations. And I wonder if there is such thing regarding these companies in Financial Watch, Finance Watch, the organization you work?
Yeah, so we don't operate in the same way of having red lists or blacklists. A lot of NGOs do that job. So I think we have we're lucky that we have a good number of organizations who really try to understand where those harmful activities, the activities that are really harming the climate, that are accelerating climate change, where they are being financed, which banks, which insurers are providing them investments, are insuring their activities. And we look at that at Finance Watch and we try to understand, what that means for regulation. And in Brussels, where that mainly means something is the classification. There's a big bit of work on something called the taxonomy of sustainable activities, which some of you might have heard of. And it's a big classification of what economic activity, so which companies, which kind of activity these companies do could be classified as sustainable. Now, a big debate around this topic is that in Brussels, everything is political. Everything is political, everything is politicized. And so in this classification that should be for sustainable activity only, saying so that we can tell everybody, to consumers, the companies themselves can create a label for their product saying, is it sustainable or not? But inside this classification, we have nuclear energy and gas, because a couple of big member states and of the EU, so a couple of the big EU countries insisted, pushed, and used their political capital, their strength in the debate to make sure that these two areas of energy were considered sustainable, which completely destroys the credibility of this classification, as you can imagine. So I think I know it's not exactly answering or responding to your question, but it's more slightly aside to your question, which is that we don't do that ourselves as Finance Watch in the sense of creating that list, but we try to use that information, that crucial work that a lot of NGOs and campaigners do to understand the impact of companies, create these lists in order to contribute to this bit of regulation in Brussels of what's a sustainable activity. But yeah, at the moment, there's a lot of work still to do. And I'm going to speak to you a little bit about influencing financial regulation as well, which is partly going to be a call to you all, I think, if you would ever be interested to use some of the activism and interest you have in taking action to make a contribution as well in Brussels. So it's going to be a pitch to you guys as well, I think. Okay. I'd like to jump onto climate risk as well, if I could. This is a special topic for Finance Watch, and we're probably one of the few organizations quite unique in talking about this. So climate risk for us is looking at not only what our financial institutions' impact on the climate through the activities they finance, but also looking at what is climate change, what is the risk that climate change poses to them. We've seen huge banks have to be bailed out with taxpayer money in 2007-8. Credit Suisse, earlier this year, huge banks, Silicon Valley Bank in the US. We still have to use our money that we all pay when we work, taxpayer money, to prop up failing banks. It still happens. We had the crisis 2007-8, a long time ago now. Easy to forget about it, I guess. Easy to think things have changed significantly. But what we saw this year is, and what we keep seeing, is that that's not true. Why does it matter? We've got taxpayer money. Those big banks, sometimes maybe they fail, maybe they don't, do the things that they should. A lot of people's money is in those banks, so it's difficult. We have to help them. We have to make sure those banks don't fail because it'll cost people money ultimately. I think that's, it could make sense, that train of thought. It could be something that many of us would think, and that maybe we read in the media, or it kind of makes sense. We have to bail out the banks. We have to make taxpayer money available. But that money could be going into exactly the kind of investment we need in climate change from government's points of view, investing in more energy infrastructure to allow us to have that transition, investing in schools, hospitals, whatever it might be, going where that taxpayer money was always intended to go and should be going, not into a private company. Any other private company, which isn't so important financially to society and the system, wouldn't be given public money. It would just fail. And that would be that. It would cost the people who invested in it some money. That's the risk that you take when you make an investment. So here is a kind of a core topic for Finance Watch. And it's a topic that we link to climate change as well, because climate change is causing huge events, whether it be weather events, whether it be different kinds of disruptions that can happen to the economy, which could cause a financial crisis. In fact, they very likely will cause some sort of economic disruption in the future if more action is not taken. On the path that we're taking at the moment, there's a high risk that we could cause an economic disruption or a financial crisis, where financial institutions, banks, insurers, investment companies just aren't looking. They're looking at a short-term perspective, not looking to the future and not really able to calculate what's the risk of climate change, what's the risk that a huge weather event could pose in the next couple of years. What could that do to my business? What does it mean for me? It's very difficult for them to do that, because normally when they look at a risk, something that could impact their company, which could cost them a lot of money, mean they lose a lot of money in the financial markets, they look at what's happened in the past. What kind of companies have lost money in the past? How have markets, financial markets, moved? Where has money been lost? Which types of activities? What does risk mean in that sense? Where do companies fail in other moments, or where does investment go in certain different moments in history? Well, we haven't had climate change in this way before, so we don't have historical data that tells us what's already happened, that we can look back and say, this is the trend. This is what we see has been happening. We understand it. Therefore, we can say with good probability, these are the tricky areas. These are the dangerous areas that we need to be careful of. This is how much money we need to, have available in case something goes wrong. So climate change is really a very, very different kind of risk for a financial institution, for the industry. And it's a huge risk to what we just spoke about in the beginning there, shifting trillions. Because if there is a financial crisis, a huge financial crisis caused by climate change, not only will we have to use taxpayer money, which we could be spending on helping to have that transition, to have a more sustainable economy, invest in doing that, not only is that money not going to be available, some of it, maybe even a lot of it, because it's going to be bailing out these huge financial institutions so that people's money doesn't vanish and that our financial system doesn't collapse. So not only is that going to be the case, but also these financial institutions are not going to be able to invest and shift those trillions. They're not going to be available. They're going to be gone. So for us at Finance Watch, this topic of climate risk is crucial, is something that we have to have. We have to have it and make sure that the safety net of financial stability, that's what we would call it in Brussels, financial stability regulation, making sure that these companies don't take too much risk, that if they fail, we don't have to pay for them as taxpayers, is crucial to ensuring that we can have that transition, that those trillions are available, that they're there, and that they can be spent on a transition to a more sustainable economy. Hopefully that was an accessible explanation of this topic. It's not an easy topic to understand, but maybe just pause in the room and see if anyone had any thoughts or
there's one question.
Or feelings about that.
Maybe you take a moment and think whether there are more questions.
So my question is kind of related to sustainable and climate change, but also it has to do with personal data. So we know that banks use personal data in their membership requirements to operate their systematic processes. And we know that this data could help to track sustainable businesses in the future, as it is used now to monitor users' interests, to sustain credit, or even to address products to consumers. So how Finance Watch sees this scenario in a climate change regulation? How can these kind of data help financial regulation in the future, in a sense of tracking the interests of corporations, of companies in their financial businesses? So is it possible? Because we know that we are talking about personal data, and we know that we also have regulations for like corporations' data. They have this protection over it, and we also know that banks respect this kind of data. So how can we use this interest to track and also to give the consumer some sort of this social responsibility that the companies are actually committed to give to us a more sustainable and more climate change thinking process and businesses? Thank you.
Thank you. It's not an easy question to answer, but we do have a thought on it, and we work a lot on digital finance and how financial companies use data indeed. And one of the main things that we think is crucial to that, and it's really from the perspective of also financial inclusion, so also looking at the social impact of finance and ensuring that ultimately what is a tool that gives you access to a dignified, normal life in society, you need a bank account. You can't get a job if you don't have a bank account very often, or at least not a legal tax-paying job, because you'd need to be paid into a bank account. You might not be able to get an apartment either. So there's certain financial services that you need to participate in society. Maybe you don't live near a town and you need to get to work, and the only way to do that, there's no public transport, is through a car. Maybe you need to have a car insurance. Who knows? At the moment in our society, we rely on financial services. So we have to have access to them, which means we have to give them some of our data. What we believe at Finance Watch is that data and a right to privacy is still crucial. Why as well? Because there's only a finite amount of data that you need in order to understand someone's financial needs. We don't need to know everything about their social media. There's even regulation already in the EU about not being able to use people's gender as a determinant of pricing in insurance, for example. And these companies at the moment find alternative solutions to that. So they try to find proxies and different data, but they very much have the perspective of using huge amounts of data, any data that they can, which they feel they can get consent for. And that's the bypass to what you said of protecting data, is getting consent. Consent which is not informed consent, because it's just checking a box at the bottom of a lot of text that is on your smartphone to say, I can use this application. If you read the text, you might not agree with it, but you have agreed to it because you checked a box. And this dynamic of using huge amounts of data is also about monetizing the process of selling a financial product in a different way. Not just the service itself, so not just having a profitable service where you pay for the service and financial institutions get money that way, but also about them using all of that data to adjust pricing, as you said, and make profits in that way. So data which isn't actually necessarily being collected to create a service for the benefit of people using it. Now, on sustainability, we have new laws in the EU coming through where companies are going to be obliged to collect what we call sustainability preferences. So ask people questions when they're buying a financial product to understand if they're interested or if they would like to have a sustainable product, a product which has a positive impact, or at least no negative impact on climate change. At the moment, it's an imperfect law, and it's very difficult because it's very difficult to understand those preferences for people, or to agree on how you ask people about those preferences without leading them on, without trying to suggest something or put something into people's consciousness through the way you ask a question. So it's quite a difficult debate. I think one of the big policy messages which we talk about in Brussels and with NGOs in Brussels is, why not have a sustainable by default option? Why not always make sure that you have a sustainable product on offer and available for people, whether that be a bank account, an investment product, an insurance product? Why not have at least one option that you can, if it's not with your company, but if it's with another company that you offer, you point to, so that when people come and they want to have that offer, you have it. But I think we would always be cautious about collecting more data or using more data collection of, especially personal data, where there's a very limited, I would say, argument in favor of using that to offer financial products, and using too much of it. So we would probably, I think really rather say there's a greater need to protect privacy, not a huge gain necessarily for society in giving up huge amounts of its data, but perhaps a lot to gain from ensuring that there's sustainable products that have a positive impact on climate change available to people.
Paul, I think I would take the chance to shoot in a question of my own. I sense that your opinion, you asked in this room if private money is basically going to be the big solution. I sense that your personal answer is that it's certainly going to be part of the solution. But I was wondering, would you take a couple of minutes and just explain what alternatives or other sources of money do you think that it will need to raise the trillions?
Yeah, absolutely. So I think what you'll see, and what you'll see is that there are a lot of areas that need investment, which are not really areas or things that the financial industry would normally invest in, because you're looking at perhaps very high initial costs, and profits or returns on investment would only come after a very, very long time. And these are typically projects and types of infrastructure, potentially, things like having the right systems to produce energy, having different sort of transport means available, things like this, which are invested in by governments. And I think that is key. And so when we talk about private finance, which would be the financial industry, we also, on the other hand, talk about public finance, which is everything that governments, that our public money, our taxpayers' money, which goes into government budgets, is spent on. And here at the moment, we have a huge debate going on in the EU over how much debt governments can take on. And we have two camps, I would say, broadly speaking, in this debate. One camp, and Germany, by the way, is one of the countries in that camp, which says, oof, you need to be very careful. If you get into too much debt, you overspend, you don't balance the books, your country is going to have problems. Your debt is going to be unsustainable. It's going to be too much debt, and your sort of the credibility, the credit worthiness of your company. So whether or not people want to invest in your country will drop. You won't be a credible investment anymore, because that's how governments also raise money, is they sell a government bond, sell a bit of debt, if you like, on markets to raise money. Some of you might know about that. It's a little bit technical, getting into a bit of detail, I know, but they raise money from financial markets, so from companies, from citizens, from anyone who wants to buy it, where basically they open up a little promise saying, give us this amount of money and we'll pay it back to you with interest after a certain number of years, 10 years, 20 years, 5 years, whatever it might be. And they can not raise as much money each time they do that if they've got a lot of debt already, is the idea. But there's a part of this which also we need to maybe challenge, which is that a state is not like a household. A state is not like, they don't operate like you or I, or like our finances. It's not that we have to necessarily pay off a loan at the end of the month. We don't need to balance our budget necessarily. A state a better comparison might really be more of a company where we invest to grow potentially. I mean, although growth itself could be challenged and is challenged a lot in these times. But anyway, so maybe to come back a little bit more to what is private finance's role and public finance's role. The question here is, can governments and should they invest more? Invest more in our future, invest more in this kind of greening of our economy, making sure that we have different transport and energy options available, making sure that citizens are not left behind, so that when they perhaps lose their jobs as one of the activities they were working in becomes unsustainable, do they have training, support to help them move into a different job or something like that. So there's a huge role here as well for public finance, but it's a double role for governments in a way, because not only do they need to decide and create budgets which invest in the future, but they also need to regulate the financial industry to make sure that they are shifting the money as well. So in a way, the impetus and maybe the start of that transition and the start of shifting the trillions is to some extent what governments have started doing, going to the Paris goals that they've agreed to, making sure that they're implemented, agreeing to have these climate goals. That's a starting point, but then they need to implement them. And they need to implement them in the way that they spend our money and the way that they invest for our future, and also in the way that they regulate the financial industry to understand and make sure that the financial industry explains to us, is transparent on their impact of the climate, and also that they change the way they do business so that they are working with governments for society to tackle this huge problem.
Thank you. I think that, of course, raises the question, are the governments doing a good job right now? If the government's two jobs are to invest in a sustainable future and to regulate so that private money also helps create a sustainable future, are the governments right now, as you see, doing a good job? Could you hear the question? Can you hear us, Paul?
If it was a question, yeah, I just wanted, I was wondering if it was a question to the room or to me. But I mean, if it's a question to me,
then let's do it as a question to the room so that you get a chance to stand up. The governments in this world have two jobs. They should invest public money to help create a transition to a sustainable future. And they should regulate private money so that private money don't go to bad places, but go to good places. Two jobs. Do you think the governments of the world are doing a good job? Please stand up if you say yes. Please sit down if you say no. A tiny, tiny movement, the tiniest of tiny movements. So please, Paul, what is your take on that question?
Yeah, I think I will slightly avoid the question because we have to work with governments every day. So I'll take a slight politician's approach to directly answering the question, but rather say that we have European elections coming up in June next year. And we're starting to have campaign trails now in Brussels. So all of the political groups who run groups in the Parliament, so who the MEPs are part of, the European Commission, are all now looking towards June 2023 and what's going to change. And here we have a real opportunity, not only as citizens to vote, and please vote. I mean, it's if you want to take an action, voting is an action that you can take to influence a government directly. It's choosing your government and reading a manifesto and going to put that pressure, ask people to represent you and your views. And so it's the key way we have to influence a government, right? Is by voting them in and by being there and encouraging everyone we possibly can to do that, and perhaps having debates with our people we know to talk about it and try and encourage them to be part of that as well. So I think that's one thing I would say, is that we all have an opportunity to influence our governments and influence our representatives in the EU. We have that opportunity in June 2024, so next June, but we also have an opportunity until then to ask people who are running to be MEPs, the candidates, the people who you'll start to see debating on television from all the different political parties, to ask them to make this a priority, to make this transition to a more sustainable economy, to regulating finance, to spending public money where it needs to go, to make that a priority and to promise to do that. And I think that's one of the key things that we can all do at the moment to try and get more from our governments and more from our representatives. They should be coming to Brussels, going to Berlin, wherever it might be, and representing our views. Not all of them. We don't all have the same views, and unfortunately, perhaps that's a democracy, that's our society. But at least we can have a role that way. There is more you can do, though, and I think if we have time, I could very quickly take you through. There's a lot of slides here, and I've kind of deliberately avoided going through the slides because I think for those who want, they can have them as a tool afterwards. I think it would take a lot of time to go through them. But I just wanted to spend 2 minutes on this slide. It looks very complicated, and I'm sorry for that. But this is what we do as Finance Watch to influence financial regulation in Brussels. And the center of this slide that you see is the legislative process in Brussels. And it's how laws are produced. The Commission is the organization that tables laws. The Parliament, our representatives, and the Council, our governments, negotiate those laws, decide on how they should end up. And then supervisory authorities, so our financial supervisors, the organizations the experts who check that the rules are being put in place and that companies are respecting the rules, add a technical layer of expertise to them. And Finance Watch, what we do is we're here in Brussels. We're here in Brussels every day, influencing that process, speaking to the different people, submitting responses to consultations, writing emails, meeting them, sending press releases to the media, gathering information and intelligence on what the discussions in the Parliament are, and trying to find opportunities to raise the public interest position in all this process, as the financial lobbyists from the industry are doing. Now, it's difficult for you guys and for anyone who's not here in Brussels and doesn't have a lot of expertise to be involved directly in this process, but there are lots of opportunities to speak to your member of parliament. They each have a constituency, they come home, they spend time there, they have an email address, and we have an opportunity as well, I think, as citizens, not just in this very complex, legislative or complex slide on a legislative process. It's difficult to be involved in that, but there is an opportunity for any of us to question our representatives in the parliament in particular, or our member states, and to be involved in some of that work. And Finance Watch already does that. We already work on a campaign called the One for One campaign, where we're trying to make sure that financial institutions don't take too much risk and don't invest in fossil fuel activities, which we consider to be, especially new fossil fuel activities, incredibly risky, too risky. And we work with campaigners and activists to put pressure on politicians and policymakers to raise these topics and issues. So in order to achieve all the things we try and do throughout this legislative process, we work with campaigners and activists to partner up and increase our impact and raise these topics with policymakers and show them that citizens care and that citizens are watching what's happening. It's not just a closed-door legislative process in Brussels, but there's some accountability.
Thank you. I can't help thinking this was quite, how to say, a little bit of a deep dive into how you try to make the European Union regulate more to make sure that private money does more good than harm. I don't know if this is a way too difficult question or completely out of the realms where you work, but do you have any insights on what it looks like in other parts of the world? Are there NGOs that you cooperate with who are active in other parts of the world, who are also trying to work with their governments? Or would you say, I give you the hint that yesterday in a keynote, there wasn't only just positive views of how the EU is trying to regulate private money. There was also the view that these regulations kind of keep developing countries from developing in a way that they really have the right to. Western countries use tons of fossil energy to get where they are, and now we are telling others that they shouldn't. So if you have any thoughts on these two topics.
Yeah. So I think very often we have a discussion. To answer the first question is, I'm focusing on the EU legislative process because that's where our expertise is, mainly in Finance Watch, and it's also where we are. We're in the EU. You'll be talking to the European Central Bank, and I've got one or two things to tips or questions and things you can challenge them on the things that I've been saying that are relevant to their work at the end. But we also work at international level as well, trying to make sure that the things I've been talking about, perhaps less on the government spending, the public spending, because we're not taxpayers outside of the EU, but on regulating the financial industry internationally as well. We do that. And there's a couple of key institutions that work on that. One is the Basel Committee in Switzerland. So it's the organization where all of our central bankers, but central bankers from all across the world, come together, or representatives of the main institution that's ensuring financial stability, so ensuring that our financial system doesn't fail, where they come together and discuss international rules. And those rules are then implemented so that they become our EU rules. They should become the rules in each jurisdiction. And we not only talk to a huge constituency, and part of that, which is all of our EU country representatives to that organization, but also to the United States, to Singapore, to Brazil, to different countries all across the world who we know are mostly interested, also trying to do something about this issue to try and create that change. So yes, it's extremely important to be involved at international level. Climate change doesn't recognize borders. There's a lot of different interests and perspectives on this topic. We see that through the work of the IPCC, through the international discussions on setting goals and on creating some justice into this project to achieve climate goals. And one of the big discussions that you'll see in the run-up to this next COP, this next huge set of discussions between global discussion between different countries, is that many countries are exactly raising that problem, that this topic of the cost of climate change, the cost of development for them. The question there is, what should the EU do about this? And it should be present. It should be part of the discussions to involve regulation. It should be paying. That's very clear. And many EU countries have already said that they would pay and support a just transition. But it's not an easy topic. It won't be an easy discussion. And it's not an easy discussion because of the economic climate we find ourselves in. And because we have elections coming up, and because policymakers and politicians, unfortunately, maybe not always, but many of them might be more interested in being elected than about solving climate change.
Okay, so we have one more question, and then I think we would love to hear those points on the central bank.
Yeah, my question, I think, is in the same line of what you just said. So previously you also said that banks should, I don't know if I got it right, but I think you said the banks should address some sort of green product to the consumers. using these personal data. But what about a bank that has a bad background with financing deforestation, for example? So just, for example, Rabobank in the Netherlands, they are financing deforestation in Brazil, for example. It kind of compromises the credibility of the institution in itself. So how Finance Watch think it would be a solution for those banks to conquer the consumer's trust once again?
Yeah, so I think a lot of one of the points that I would like to get across is that, unfortunately, most large financial institutions, banks or insurers, will have financed an equivalent of activity. It's very likely that they will have been financing an equivalent, what an activity like that, or will have done in their past, that they will have made huge amounts of money from financing activities which we know are destroying our climate. So that's very likely. And the choice of banks would probably be quite limited if we took away all of those organizations and banks and said, well, they shouldn't exist anymore. They don't, we won't use their bank accounts. So that's exactly why we think what you need is to look at how you regulate that activity. First of all, to have proper transparency, because those financial institutions, those banks often don't want to give us the data, don't want to let us know. We have to rely on campaigners going and searching and finding out that they are doing it, first of all. So that's the first point, is we need to have transparency, so that if banks or other financial institutions do that and choose to finance that activity, we know about it. I think that's the first point, so that we have some sort of transparency. And the second thing is to regulate against it. That is still, in my opinion, the role of governments, of our society, to say that activity is no longer acceptable. We don't agree. We see the risk of it. It's not only a risk to our climate, it's a risk to the business model of the bank, because it's accelerating climate change, which could cause a financial crisis. So there's a loop, and there's at the moment a kind of a doom loop, which is causing not only accelerating climate change, which is having a huge detrimental impact on our society, but also increasing the financial risk to that company as well, and the chance of a financial crisis, which will take away their ability to change our future and invest in that transition. And it's really the role of a government, of a supervisor, to use financial regulation to cut that and stop that sort of doom loop, and turn it into a positive loop, where we instead finance sustainable activity and reduce climate change.
Okay, thank you. So everybody please stand up who are going to the central bank next. Okay, so please wave if you are interested in hearing Paul's points, what you could ask the central bank, or where you could maybe tease them a little. Thank you. Okay, so Paul, we get into that straight away. Thank you for doing that for us.
Yeah, so I think what I would like to ask the European Central Bank, if I was going today, is really to challenge them on this idea that on climate risk, on this idea that I've been talking to you about today, of our banks, our insurers financing activity which is potentially causing a huge risk to financial stability. Ask them, what do they think? What are they doing about this? Do they see this problem that is in front of us? So what we're saying in Finance Watch is that the current rules don't work, because they look at the past, they look at gathering data from the past, and they use that data to predict what might happen in the future. Climate change can't be assessed in that way, because it's changing so quickly and emerging in so many different ways every year. So what can they do about it? What does the European Central Bank say they can do about it? And there's a very important point here about what their role is, because they don't just control our monetary policy, and work on monetary policy, they are also the supervisor. So they are the organization checking on the EU's largest banks and regulating them, enforcing the rules, the financial regulation for the EU's biggest banks. And the biggest banks, obviously, the ones that are most important when it comes to financial stability, but also the ones who can potentially shift the most money. So I think the question that you could ask them is exactly that: like, what do they think they can do in the European Central Bank to help this transition take place? You know, what's their role? And I think really challenge them as well if they say, you know, it's for governments only, because they do have a role. Their role is also about trying to ensure that there's transparency, that people know what the role of those banks are. What are those banks doing with our money? What are they doing? What is their impact on society? You know, if the European Central Bank is there to regulate and to kind of protect our interests as citizens with those biggest EU banks, then they also surely have a responsibility to make sure that we know and we're sure that there's no risk being posed, or that risk of climate change is being dealt with properly. So I would focus on that if I was in your place. If I had the opportunity today to go and speak to them, I would ask them about that. What are they doing? And first of all, do they see the problem? And then what are they doing about it?
Thank you for those points. Are there any more questions in the room? Yes, there's one more question.
Hi. So I have a couple of questions. So firstly, Finance Watch is composed of, you said, former bankers, former professionals of the financial industry, right? So how do you all avoid like a conflict of interest with the existing financial system? And yeah, so public interest basically, right? And the second thing was, I forgot the question actually, but this is one I had.
Thanks. Yeah, and if you remember the second one, just go for it as well. But so I think the key is that people who used to work there. So most of the people who joined Finance Watch initially left the financial industry because of what they discovered about the financial industry around the period of the financial crisis. So that was a lot of the initial staff members that we have. And then since then, it's been staff members who, similarly have left the financial industry, but left the job, so have no continuing ties. And with our membership and our board, we have a transparency committee and a kind of vetting process that we have internally to check every new member, every new staff member, every new board member, to ensure that they don't have a direct conflict of interest, so a financial link to the industry, or a position on a group or board that would involve some sort of direct conflict of interest. Then, because we do hire people who worked for the financial industry and they left that job, we do rely in a way, and we do rely on their sort of their character, the assessment that we make of them and their action once they join Finance Watch. So we trust that when they've left the industry, that when they have no direct ties, that we can vet people sufficiently, but then also see from their work every day and their commitment that they are working for our cause.
Well,
but I think it's a balance that we, it's a balance that we always try to find. And I think it's also a perspective that's maybe important to have and easy to lose, is that a lot of people who work in banks are not there because they want to finance fossil fuels and destroy the climate. They're just people who had studied well, got a good job when they left university. They're not politicized, and there's an element of closing your eyes to the problem, but they're not trying to do something that's damaging the world or society necessarily. They're just trying to earn a living, have a good job, have a nice life, and closing their eyes a little bit, then that's maybe what they're guilty of to the problem and to their role in it. But, I think a lot of people, if they are politicized, if they are challenged with the reality of what their job means or what their contribution to it could be, might not be comfortable with that. And so it's easier to close your eyes, to look away from it. And that might be what many people are guilty of in our society in general. But it's not, I think it's harder to find very bad intentions.
Well, thank you so much. We are running out of time, and since we are going on excursions, we cannot prolong. I must say, the talk yesterday and today made me feel very thoughtful. One thing I heard yesterday was that neither private money nor public money is going enough to adaptation. It's all going to mitigation, if it's going at all. Wow. And today, yesterday we also heard private money will not solve this problem because it's guided by profit. And now we've heard you are doing so much work to try to make sure that there are regulations that make sure it helps solve the problems. But it seems that we are still running behind on that. Upcoming elections might be a chance, but might also make it more difficult to get politicians to stand up for the right thing. So lots of stuff to think about. But it makes me hopeful to hear that there are people who stop having their eyes closed and who do open up their eyes and try to do what they can to get the things to where they need to go. And thank you so much for telling us today how you do that. And we wish you all the best and successful lobbying work, I think.
Thank you. And, a small last appeal would be, where you can, if you can, lobby as well. So I know some of you, a lot of people stood up and are active and taking action, part of groups that campaign and take action. And I think I just want to reassure you maybe or let you know that we see that in Brussels and it does make a difference. When policymakers, when politicians see that people are willing to get out on the streets, are willing to make noise, to take action, they hear about it and they listen to it, and they particularly care and listen to it if it's younger people who are the future of our society. So, thank you for doing that, for those of you who do it, and please keep doing it.